Hey everyone, welcome to another episode of AdMail. This is Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial.
Everyone, welcome to another episode of AdMail. I'm Adam Bergman, tax attorney and founder of IRA Financial. On today's podcast, we're going to tackle three superb questions from three super smart individuals. One involving selling a condo or buying a condo from a fiance with an IRA. Another one using an IRA to buy digital real estate. And the final question is going to tackle setting up a solo 401k. Can a checkbook control LLC actually be the adopting employer? So it should be a really interesting podcast. So super excited to get started. And without further ado, let's rock and roll. So the first question is from Lizzie T of Costa Mesa, California. Lizzie wants to know, my fiance owns a condo. Would I be able to buy it from her or him using a self-directed IRA? So fiancés are not disqualified people. So there's two things you need to trigger a prohibited transaction. And a prohibited transaction is a transaction that's not permitted in an IRA. And that's found in Internal Revenue Code section 4975. Essentially, when it comes to individuals, you're not allowed to transact with yourself personally, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities, trusts controlled 50% or more by such people, right? So brothers, sisters, aunts, uncles, cousins, friends, neighbors are not disqualified people. A fiance is technically not disqualified today. That could change when you officially get married, but we all know there's no guarantee that an engagement turns into a marriage. A good friend who got engaged and the engagement broke off. It happened. So to answer Lizzie's question, yes, technically as of today, you could transact with your fiance, but be careful. Obviously, you're using an IRA, so you can't live in that property. So if you're just going to purchase it from your fiance, then make sure that you rent it out when your IRA owns it to a third party that you're not personally benefiting. Number one. And then obviously the money that you provide your fiance shouldn't somehow circle back and personally benefit you, right? So you want to make sure that this is a closed transaction. It's between your IRA and the fiance as of today, and there's no direct or indirect benefit that will otherwise be materially developed by the relationship. Okay, so it's a straight IRA, fiance, no disqualified person, no prohibited transactions allowed, but make sure none of that cash that the fiance gets somehow goes back into Lizzie's pocket. So that's what I would, be cautious about, Lizzie. Second question is from Twitter. I want to invest in digital real estate in the metaverse with my self-directed IRA. Can I do it with IRA Financial? So yeah, we'll let you do anything that's legal. The good news, notice 23-27 just came out in March, end of March 2023. And now we have some clear-cut guidance, or a little more guidance, I should say, on what an NFT is and what is permitted to be invested with a retirement account. So we know under Section 408, collectibles are not permitted to be invested with a retirement account. And 408 talks about tangible collectibles like antiques, rugs, stamps, baseball cards, diamonds. It doesn't talk about intangibles like NFTs. And notice 2023-27 was clear, saying, in their opinion, NFTs right now are not covered by 408M because it's not tangible. And then they give essentially a couple examples. And they have this look-through analysis that's been developed in this notice that says, hey, in order to determine if the NFT is a collectible and therefore not able to be invested by a retirement account, you have to look at the underlying asset. So what does the NFT own? If it owns a gem, a baseball card, a diamond, comic book, artwork, probably going to be a collectible. It's called the look-through analysis. But if you look through in that asset like digital real estate, which is actually an example, it's funny you sent this question, it's actually an example in 2023-27. And according to the example in the notice, digital real estate is not a collectible. Okay, so therefore, an IRA could invest in an NFT that owns digital real estate. And we know NFTs are broader than just pictures of art or meme characters or highlights, baseball cards. You can show ownership. There could be utility. There's a lot of different stuff that NFTs could signify and also clarify in terms of ownership or membership. Real estate's another example. And as of notice 2023-27, digital real estate is not deemed a collectible and therefore permitted to be purchased with a self-directed IRA with IRA Financial. So if you are interested in buying NFTs in the metaverse or different stuff, talk to us, call us. We can help you go through notice 2023-27 and kind of talk about the NFT rules. The IRS has basically asked for public guidance as of June 19th, 2023 to say, hey, we're still thinking about how the rules should work, and we'd love to hear from the public to help us make a more educated, more flexible type of ruling, which will help all of us. So if you have comments, submit them, which again, I've said this before in various videos and podcasts. I give them credit. They're looking to get this right. NFTs are a new, unique type of asset, and sometimes it's hard to apply old traditional rules that apply to traditional assets, tangible assets like art, to intangible. So we'll know more soon, but to answer your question, and sorry, kind of long-winded on this, digital real estate does not seem to be a collectible and therefore can be purchased with a self-directed IRA. Third and final question on today's podcast from Victor R. of Henderson, Nevada. Victor wants to know, I have a self-directed IRA LLC with you, but heard about the solo 401k. Can I use the IRA LLC to establish a solo K? So this is the question. In order to set up a solo K, you need two eligibility requirements. You have to have a business, and the business cannot have any full-time employees other than the owners or their spouses. Full-time means 1,000 hours or more during the year, or 3 consecutive years of 500 hours or more. Now, the issue you're going to have, Victor, is the IRA LLC is not a business, right? When your IRA sets up an LLC to do real estate, generally 99% of our clients do not want it to be a business. Why? Because if it's a business, it will trigger UBIT, unrelated business income tax, which could apply a 37% tax on the business income above $15,000 or so. So you don't want it to be a business because you don't want UBIT to apply. You want the IRA LLC to be deemed a passive investment vehicle. Okay, that's the goal and that's the intent, and really in most cases that's what's happening. So to use this IRA LLC that doesn't have any employees, doesn't have a business, just an investment vehicle, that should be the intent. To adopt a solo K can't be done. Plus, Victor, you're not going to be able to be employed by the IRA LLC because that would trigger a prohibited transaction because you're not allowed to be employed in a business your IRA owns more than 50% of. So a lot of people get confused. I wanted to bring this question to light because you're not the first person that's asked me this. I actually get this question quite often saying, hey, I want the solo K. I can put away more, right? In 2023, you can put away 66K or 73.5 if you're over 50. There's exemptions for UBIT for real estate acquisition. You can borrow up to 50K. Some other exciting options in the solo K that don't apply to an IRA. You don't need an IRA custodian. You can hold it in a bank. Like a lot of people want the solo K for good reason. Like I've written 2 books on it. I get it. But you're going to need to have a business outside of your IRA. So Victor, if you sell, used iPhones on eBay or sell T-shirts on eBay, or you're a math tutor or a consultant, or I don't know, you're a Santa Claus during Christmas at a local shopping mall, like that's cool. You can adopt a business. You can adopt a plan, through that business. The IRA LLC is not a business. And on top of that, you can't be an employee of the IRA LLC. So that's not going to work as an adopting employer. An adopting employer could be a sole proprietor. It could be an LLC. It could be a C Corp, S Corp, partnership. But generally, it can't be an IRA LLC. Number one, it's not a business. Number two, you can't be an employee of it since your IRA is going to own more than 50% of it. So great question, though. Some people may think it's pretty obvious, but it's not, because the stuff is kind of confusing. So that's my job, to kind of unconfuse things and make things simple, easy, so we all can become better, smarter, self-directed investors. And that's it. That's a wrap. Another AdMail in the bag. Hope you guys enjoyed today's podcast. If you're watching on YouTube, appreciate it. Thumbs up. Hope you guys enjoyed it. I love these podcasts, as I keep mentioning. They're short, they're sweet. I do prepare for them. Don't think I don't. But I get to learn from you, because I get to think about things that I don't always think about, because these questions pop in. So you can submit on our YouTube channel, on Twitter, Facebook, Instagram, or you can send an email to info@IRA Financial and just say, AdMail or Ask Adam. And the questions get to me, I promise. I have a queue of, I don't know, like 75, 80 plus, but don't hesitate. If you have a good question, send them in. I will. Sometimes I kind of play around with the queue. If I think there's something topical or something that's super interesting, I'm just getting a lot of them, I'll push it to the top. So just because I have a bunch in queue, don't feel like you can't submit. Submit it. I'll answer the question for free, and you'll get a good answer, I promise. You may not like it, but it's the right answer. That I can promise. So I get to use my tax and legal background to hopefully help all you out, and that's what the name of the game is. So thanks again for listening. Don't forget to subscribe to this podcast. It's a podcast that drops every Thursday. And that's it. Have an amazing rest of your day, and take care.